What are the main challenges that traders are facing these days?
Well, we face challenges every day, and it's to put the businesses together to buy and source material and logistically move it to our customers. Besides the pricing issue, logistics continues to be very difficult for the traders to complete, and the reason being that most customers today wish to purchase less material each time than before. Customers that we traditionally supplied with 5,000 to 10,000 ton parcels, they now send us inquiries for 375 tons. Therefore, I believe that there's going to be a more shift to containerized shipments of steel in the future, in the next 5 to 10 years. And we are also facing challenges on getting credit insurance for our customers. Many of our customers have reduced the financial capabilities, so instead of having a credit facility of, say, $1 million with a customer, we only have $350,000. And customers are increasingly interested in having longer terms in between 90 and 180 days. And this is a challenge for most trading companies to get their financing banks to agree to give operational credit to our customers.
And you said that your customers are now holding lower inventories than they used to. So do you think it's becoming the new normal?
Well, it is definitely normal now. The question is what will happen in the future. Most countries that we are doing business with have in between negative growth rates and positive 6% growth rates. And I would say that probably the average in our total tonnage that the growth rate is somewhere in between 2 and 4%. When domestic economies are growing more than 4%, then people are willing to hold higher inventories. When countries are growing at below 2%, they tend to hold smaller inventories. So that kind of question depends on which particular country and region you're talking about in the world. There is also another reason for the lower inventories is that there is now more domestic production in more countries in the world. And at the same time, for having imports, the lead times are shorter than they have traditionally been. Hot rolled products, the lead time has usually been historically 4 to 6 weeks, and for cold reduced material 6 to 8 weeks. But many countries are able to provide production within 2 to 3 weeks of each product. Thereby, the customer is able to delay purchase decisions and also purchase smaller quantities each time, and that allows them to operate with lower inventories. The third issue is that there are many countries in the world where the interest rate for operating capital is above 20%. And when companies are growing, they are growing in many different areas. So they prefer to keep money tied up in inventory as low as possible.
And the last question, what is your outlook for the second and third quarter of this year?
Second quarter, I think, will be, or I believe, will be approximately the same as the first quarter. And we're waiting for price adjustments and balances to come out of China. Every day we hear more political information out of China, which will dramatically affect or can affect the marketplace. I'm optimistic about the third quarter because of pent-up demand in the steel business cycle.
Thank you very much.